Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. I'll start with Chicago soybeans. Beans in the teens and now falling. The weekly key reversal up seen 5 weeks ago was the start of the last sharp move higher. This after spending most of 2021 with a gently rising bull channel, currently 1397 to 1492. 4 weeks ago I set out some ideas on what might lay ahead, and I quote, "The market has utilized the ammunition provided by the upper bull channel line to launch a move higher. We now have overhead the 2014 high at 1521 and then the neckline, that's currently at 1577, of the old 2010-2014 irregular head and shoulders top. There are two things that must now be considered. Firstly, an initial topside target X for the bull channel would be in the 1596 area. Secondly, let us look at the whole December 2020 to date action as elements of a bullish measured move up, in which case we may look at an initial target X1 in the 1533 area, elementally doable, and a full target X2 in the 1634 area. These are levels to keep an eye upon." End of quote. Since then, every one of those target levels has been hit. Most gratifyingly of all was how last week the market hit the final target X2 and in the process of doing so formed a weekly shooting star pattern, type 1 bearish. It seems the market has had enough energy and ammunition to get to the targets before falling back. So what now? Well, it seems that we are now in the territory where we might see a braking effect from the fall. There is a lot of support below from the original bull channel. This will also see the additional support from the combination of the rising short medium moving average, currently 1463, and the August 2020 to date uptrend, currently at 1462. Plus below, the rising medium moving average, currently 1422, and of course the lower bull channel line. There is no immediate pattern evident in the recent action other than a possible bearish bump and run reversal top formed throughout 2021 so far, but it is very early as yet on this idea. It would very much depend on the market reaching the lower bull channel line and on what it did once it managed to get there, if at all. That's something to watch out for. Chicago soybean meal. The weekly key reversals up recently seen in both soybeans and soybean oil, but not here in soy meal, had an indirect effect, showing that this market is not immune from the bullish incentives elsewhere, though it seems to be a bit of a laggard. This laggardness will have consequences, as I will show in a little while. Though we did not have a weekly key reversal up here 5 weeks ago, prices still nevertheless rose, if hesitatingly. I spoke 2 weeks ago of a possible pattern build-up that I wished to be considered, and I quote, "There is perhaps one other possible bullish feature out there that is still developing that may provide a solution. If we look at the mid-April to date move as a possible small bullish measured move higher, then this pattern could be the answer as to which of the two forces ranged here will win out. Now I've tentatively placed a target X in the 445 area as a result of this potential. Part of me is loath to do so, as this action is not wholly clear and we may end up back down at 400 if it fails. It's best to say so now than look good in hindsight. As you can see, in clear hindsight, I was so glad I did. Over the last 2 weeks, prices have been dragged, as I once said, kicking and screaming higher, peaking last week with an indecisive spinning top last Wednesday, before crumpling down through all the moving averages and the recent 50% Fibonacci line of 423.5 to only slow down, as it did in April and March before, at the lesser 38.2% Fibonacci line of the August 2020 to January 2021 move at 399 even. So what now? Well, do you remember earlier on I mentioned that there were going to be consequences to being the laggard of the crush complex? Well, this is where the payment for this seems likely to be demanded. The fall lower today has exceeded the one for April. Thus we are set into the criteria for there to be a monthly key reversal in May. Yes, with a week and a bit to go, we now need to look to see if we can close on the Friday next week either above 426.20 or below 424.70. Those are the numbers. If we do, then we'd be on. Anything in between and it will be a lesser outside month. Now right now we are looking at a possible monthly key reversal down. Chicago soybean oil. The mid-January to end of March bullish Andrews pitchfork continues to run this market despite an inauspicious start. The most recent effort in this was the piercing of a single close over the upper time, currently 68.28, last Friday, after 7 previous attempts. Yet even this was not enough, as it was just a single and only close over the time before a gapping move lower, since filled in. Now this filled in gap contributed to the fall down below the middle time, currently 62.83, where we now seem to be hesitating or maybe even settling. Below we have a congestion band from 2011 and 2012 between 57.64 and 59.73. Now this move lower since last Friday doesn't mean the market isn't still bullish. Of course it is. It's still in between the middle and upper times of the same bullish Andrews pitchfork. But a period of reflection here and maybe looking to see what pattern or actions is to come next would be a reasonable idea. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.